Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Overall, prices had tracked sideways until about 13 weeks ago. In mid-February, saw the market break higher, only as far as the June 2021 high at 18,610, and just under the then long-moving average, which is currently at 18,020, before a move back down. However, prices started to find a base again at the May 2021 high at 16,610, and around the combination at the time of the short, medium and medium moving averages. They're currently at 18,440 and 17,550 respectively. It was back then that I started contemplating what sort of pattern the market was creating. My initial thoughts were that this might be some sort of rounded bottom, which actually turned out to be true, but limited in its aspect. I next considered whether the action from the highs seen back in August last year might make this a possible descending scallop pattern, and I held on to this idea for a long while. But the longer I held on to it, the greater the holes I saw in the argument. And this led me to consider whether the descending scallop pattern was, and is, morphing to become another pattern, a possible bump and run reversal pattern. 2 weeks ago, I lodged this idea in your and my mind, and I will seek to develop it when I can. But I should warn you that a primary topside idea would be in the region of 31,200, well up off the top of my daily chart. So it's something to bear in mind. Stick in the diary, if you will, for some date in the future, but also to look at more nearby and I suppose more realistic levels first. This leads me to the elephant in the room, the early February to late March bullish Andrews pitchfork, highlighted in dark blue on my daily chart. This has so far been good at showing the bullish angle of attack of the market. However, late last week and this week, we had breached the upper time, currently at 21,200. Now, this leaves us with three options. Firstly, will the market repair the breach and drop back within the bullish Andrews? At the moment, this looks unlikely. Secondly, will prices track along the top of the broken upper time, as I've sometimes seen done on broken pitchforks? Right now, that is a possibility. Thirdly, will we have a new, more acute bullish Andrews pitchfork for the April-based action, which I have lightly outlined on my daily chart? I'm not so sure. On the negative side, the market has trampled all over the lower time of this pitchfork, currently at 20,300 when it was first created. But on the positive side, current prices are at the middle time, and that's currently at 21,530. I'll wait and see on this one, as we have some significant overhead resistances that we may see the market tackle, notably the May 2014 high at 21,610, the February 2014 high at 22,155, the August 23 high at 22,700, and the June 2023 high at 23,400. 23,400, excuse my voice. LME 3-month zinc. In early April, when the market's break higher was finally sustained, it was not without incident. Prices hesitated over middle to late April in a specific fashion, with a narrowing ranges that led me to draw in dark blue a small pennant pattern peaking at the end of April. We saw a breakout on the upside from this pennant, and as I said a few weeks ago, and I quote, I did lay out some topside targets, thus initial target X would be in the 30-40 area. However, for a harder to reach target X1 will be up in the 31.65 area, which is up off the top of my daily chart. End of quote. So it was up off back then at the top of my daily chart. Initially, the move up has somewhat lacked enthusiasm, which also prompted me 2 weeks ago to draw a pair of trend lines in purple, currently 29.78 to 30.74, for what I suggested back then, and still do, might be an ascending wedge pattern that had developed out of the pennant pattern. This proved to be accurate, as prices moved up within this ascending wedge pattern until this week, when we saw prices punch up and move out of the pattern, as well as take on the bright red coloured neckline currently at 31.50 of the September to December 2022 reverse head and shoulders pattern. This move higher over the last few days has not only achieved target X at 30.40, but also the hard to reach secondary target X1 up at 31.65. We now have this neckline to deal with, which has only been penetrated the once so far. But above this is congestion at 3200, the June 2018 high at 3220, the April 2018 high at 3302, and then the 50% Fibonacci line of the March 2020 to March 22 move at 3329. Now, helping in this bullish case will be the potential stop side for the break above the purple ascending triangle pattern, ascending wedge pattern, my apologies. Thus we have a primary target X2 in the 3294 area and a secondary hard to reach target X3 up in the 3427 area. LME 3-month tin. There were in the recent past multiple major patterns acting on this daily chart. This year's actions saw the market push back up from the stratified congestion bands below over all the moving averages and start the discussion about a just barely possible pattern here, a mid-October 2023 to late January 2024 inverted head and shoulders pattern. All the target topside for this pattern have been reached. This then brings me to another pattern, and one related to this reverse head and shoulders pattern, and that is a mid-October 2023 to very early April 2024 ascending wedge pattern. This ascending wedge pattern gave some additional targets above, and all were also reached. On to the next pattern. I said many weeks ago, and I quote, "You see, it seems the ascending triangle pattern here has morphed into another pattern, this time into a bull channel, a late December to date bull channel." End of quote. I added 12 weeks ago, and I quote, "Of all the patterns, I think this is the one to pay close attention to, as it is still fairly young compared to the others, but is also the most potent." End of quote. 6 weeks ago, prices punched up and out of this ascending wedge pattern that had morphed into a bull channel and reached all the topside targets for this pattern as well. So where has this all left us? Well, the break higher had been filled with hesitations, and these have helped create the three patterns formed over April. A bull flag in the first half of April that reached its initial topside target, then a spike upwards in the middle of the month, and then a possible hesitation in the second half of April. That one looking very much like a possible bear flag. It is a slim bear flag, but it had potential down to a target in the 30,000 even zone. But it has not fulfilled this potential. This is not all. As together, these two congestions, so bull flag, spike, bear flag, together they made up a very narrow head and shoulders top pattern with a fairly flat neckline formed over April, currently at 31,475. The potential for such a pattern was down in the 29,045 zone, and this also has not fulfilled its potential. And as I said 2 weeks ago, and I quote, "It looks like the slim head and shoulders pattern that are formed over April is not topping action, but a possible continuation pattern, maybe even be morphing into something else." End of quote. Well, that is what has happened, with prices bouncing up off the July 2023 higher, 3205, and reaching up this week just over the 50% Fibonacci line of the March to October 2022 move at 34,175. This action has led me to draw a pretty good looking dark blue highlighted bullish Andrews pitchfork, with the market in between the lower time below, currently at 33,540, and the middle time above, currently at 37,360. Right now, this looks like a pretty good pitchfork in showing a bullish angle of attack, which brings me to my final point. These recent bull and bear flags and slimline head and shoulders continuation pattern, could they possibly be part of a very large mid-March to date bullish halfway hesitation? It certainly seems possible, though we are only just in the early stages of forming the second leg of such a pattern. If it was to develop, then we could have a potential target X for such a pattern up in the 38,500 area. And to see that would be very interesting.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.